Hi, today we're going to be talking a little bit about the difference between renting and owning by looking specifically at what goes into purchasing a home. What are some of the thoughts and considerations that go into determining whether or not owning a home is better for you than renting? And so the first thing we would say is when you're trying to decide whether to own a home or not is to ask yourself a number of questions. Probably the easiest and most important is, what can I afford to pay each month? Because a home mortgage tends to be more expensive than a rent payment because you're buying ownership of the building and the property. It tends to be more expensive than if you're going to just get an apartment. So you need to look at your income and say, what can I afford? Typically no more than about a quarter of your income should go towards paying for housing. So do the math and see whether or not homes are actually affordable for you or not. You also want to know, how long will I stay? If you're planning on only staying in a location for 2 or 3 years, then buying a home generally is not a good choice. You run the risk of losing money. And so if you're going to stay for more than 5 years in a certain location, or you plan to, then purchasing a home may be a good choice. You also want to know how stable your job is, because the last thing you want to do is take out a loan for $500,000 and then lose your job, because you're responsible for making payments, whether you have a job or not. And if you don't make payments, then your credit rating gets hurt, the house gets repossessed, and all of that is bad news for you. So you want to make sure that you have a safe and certain job outlook before you choose to buy a home. Along with making the monthly payment, you have this thing called a down payment. Banks want you to put forward a large percentage of the cost of the home before they'll lend you money. Many banks want as much as a 20% down payment. So if you don't have a 20% down payment, then you may not want to try and buy the home. You can purchase homes for less than 20%, but it increases the cost of borrowing significantly. And so this is an important consideration. You also have to realize that buying homes means you're responsible for all of the repairs, and that can be extraordinarily expensive. There's a number of different costs that you will face as a homeowner, all of which you need to pay for, including taking care of any sort of lawn you may have, mowing it, raking leaves, shoveling your sidewalk. Roofs need to be replaced. Your AC or your heater need to be replaced on a relatively frequent basis, 10 or 15 years. Windows need replacing. Carpet needs replacing. You probably want to upgrade bathrooms or kitchens. All of these things add up and are extraordinarily expensive over time. You need to make sure that you have the money to be able to cover all of that. And then finally, you have to ask yourself, do I have uses for my money other than buying a house? Because once you buy the house, that money is no longer available to you to do other things. There is what we call an opportunity cost to purchasing a home. So take inventory of all of the things you want to accomplish with your money and make sure that you're willing to give up some of those things in order to actually purchase your home. If you're not, maybe renting is a better choice for you. Despite its higher cost, there are a number of advantages to owning your own home that would make it a good choice over renting. Most importantly, one of the biggest is that you get stability and permanence. You're not moving from place to place. You have a place that you call home that you're going to stay in for a long time. And that does give people a certain degree of peace, and is something that a lot of people are looking forward to. You also have the ability to personalize your home for the most part. When you're in somebody's apartment, you can't just paint the walls whatever color you want. You can't just change the kitchen and put new cabinets in. That's their property. But when you own your own home, you can do pretty much whatever you want within some limitations. I mean, there are some permits you need to receive if you're going to do some structural changes to your home. There's certain things that you can't do to the outside of your home if you have a homeowners association or something like that. But by and large, you can do whatever you want to make your home fit your personality, and that's a huge benefit. You're also able to take at least some of the interest you pay on your mortgage and take that out of your personal income for the purposes of federal taxation. So you can actually end up paying less in federal income tax because you are owning the home and paying interest on a mortgage. You cannot deduct the amount you pay in rent, and so you would have higher income taxes. Another real benefit is that owning your home allows you to build equity and increase your net worth. Remember that your net worth is the difference between the assets you own, the things of value, minus the liabilities, which is the things you owe. So over time, your house generally increases in value, we call that an appreciating asset. And as it appreciates or increases in value, your net worth becomes increasingly positive. This is opposed to cars, which are a depreciating asset. A depreciating asset becomes worth less over time and would actually hurt your net worth. But houses tend to appreciate and help build net worth. Also, because you're making payments and owning that home, and that home is appreciating in value, the difference really between what you borrowed and what the house is worth is what we call your equity. It's the value that is yours, and you can use that value, that equity, to get loans if you need to, called a home equity loan. And the collateral that you place against that loan would be the equity in your home. So if you want to take out loans, then owning a home enables you to do that as it appreciates in value. There are disadvantages to owning, however, that you do need to take into consideration when determining whether owning is the right choice for you. One of which is that you need a significant down payment. That 20% down payment is difficult for some people to pay, for many people to pay, certainly in the DC area. When homes are $750,000 or $1 million, you need nearly $200,000 to make a down payment. That's a lot of money that most people don't have without saving over a significant period of time. You're going to have to pay property taxes, which you don't generally pay when you're renting. It's just an additional cost over and above what your mortgage is. And you are responsible for the maintenance. In a rental situation, your landlord is responsible for fixing the roof or fixing water leaks and things like that. But when you own the home, it's all on you. And while permanence is a positive for many people, being stuck in one place does limit your mobility. So if you decide you don't like where you live or you get a different job, it becomes difficult to move when you own your home because you have to go through the process of selling, which can take 3 months, 6 months, a year. And during that time, you're responsible for the mortgage and pretty well stuck where you're at, or you have to pay the cost of 2 places to live, the house that you're no longer living in that you're trying to sell and wherever it is that you're living now. So owning does sort of lock you in, so you better be sure that you want to be locked into the place that you are buying. 2 final thoughts for you. One is that you have an option for mortgages to pay what's called a balloon payment. So if you don't have enough money to put that 20% down, you can get what we call a second mortgage, which generally has a balloon payment. And the way a balloon payment works is that you get a loan for an amount of money that they determine payments on as if you're going to pay it over, say, 15 years. But the reality, so you're making monthly payments as if it's a 15-year loan, but after 5 years, you will be responsible for paying the bulk of or all of what's left. That's what we call the balloon payment. So your payment at the end of 5 years, in this example, would balloon to the size of the remaining loan. And so you have to be able to come up with that large chunk of money before the whole 15 years of the loan is up. It does allow you to get home mortgages with less than a 20% down payment, but it is a danger in that you have to find a lot of money in relatively short amounts of time in order to make that balloon payment. Whether you get a balloon payment or regular mortgage, it's important to remember one very important fact, and that is that defaulting on your mortgage is very, very bad. By defaulting, what I mean is that you stop making payments. When you stop making payments, the bank will come and foreclose on you. That is, they will come and take your house because it's really their house because you borrowed money to purchase it. So if you're not paying back the bank, they will take your home, and there's nothing you can do about it. And not only do you lose your home, but then it also damages your credit rating significantly and makes it difficult, if not impossible, for you to get another loan for at least 5 to 10 years. So if you get into a home, you'd better be able to pay for it. Otherwise, your financial future is significantly damaged by failing to pay.